Hey, welcome, friends. Trading Justice episode number 216 is here for you, and this is Coach T, Tim Justice here, one of the podcast hosts. Happy to have you back. We love doing these podcasts weekly, and we've got a very special episode here. We're bringing on Bobby Shannon, and Bobby's an economics, I don't even know what you would call him. PhD, just under PhD, master's degree, nearly published. I mean, he's an expert in his field when it comes to broad macroeconomics and whatnot. And he's also a team member and somebody who has been out there teaching and helping students that we meet for a long time. And Bobby recently retired from doing that, is now traveling the world and traveling the globe as a trader. And Matt will be interviewing Bobby about the topic on environmental hedging. Very fascinating interview. I want you guys to stand by and listen to that. Before we do that, though, we are going to be getting through the market, and Matt and I are going to review what's going on out there on the market Skyline. Talk stock prices as we move into the summertime, talk about the recent volatility in oil, and, kind of thoroughly give you some analysis. On the Trading Justice podcast, I mean, if you've never gone to our website, go and take a look. We have a snazzy new website, new look and feel. I would bookmark that. We're going to be creating some content over there as well, including a few blogs. And we have a special announcement we'll be coming up with here in a few weeks, and we'll let you know about as well in terms of content. The book of the month for June, those of you who do follow the book club, make sure you go out and get it. That is called The Way of the Turtle. Curtis Faith is the author, and go grab that on Amazon so that when we do our event in the beginning of June, you can have read the book and be ready for the conversation when we do our live podcast. Without further ado, I'm going to bring in Matt. Matt, how are you doing today?
Doing good.
Doing good.
Quite the intro.
Well, I quite an intro, I guess.
Yeah, quite the
It's
intro.
interesting. I always keep notes and detail some things I want to say, but then I always ramble too, Matt. It's like preparation can
Yeah,
only
off
get
the
you so
cuff is
far,
always
right?
better. Off the cuff
Yeah.
is always better. I had one interview with Bobby. Obviously, we're gonna play that right after we get done talking here. What an impressive young man. Just coming from where he's come from to now retired at the age of 30 years old to traveling the world. Basically without a job, just trading, just living the dream. It's what I call living a financially free life. When money's not a concern, you gotta do what you love to do. You gotta work on your passion projects. You got the freedom of time, and that's Bobby. Just going down there. He sends me tons of pictures from his trips, sends me tons of videos, and we're going to upload those at the Trading Justice YouTube channel. So if you want to follow on Bobby and his journey, definitely get over there to Tackle Trading. We're going to blog over there, as well as post his videos of his traveling, living the dream over there at Trading Justice. So definitely subscribe to both YouTube channels.
You know what I love about our community, Matt, is that we get to keep track of, people's journeys. And it's like a social network, obviously. And the more people are willing to kind of share their stories, their journeys and whatnot, we get to build this community around the world. Watching Bobby travel is just amazing. It was one of our highest YouTube hits there in the last few weeks. And when you and him put that video out there, I've known Bobby a couple of years. I met him through you after you'd mentored him and brought him into our team, and just very impressive young man. When he told me he was 29 when I met him, I thought he was lying, by the way. I will tell you that.
Oh yeah,
He was
he always
29
does.
looking like 39.
Yeah, he's
uh,
always got that beard. He doesn't care that
yeah.
much about things, and he's like I said, he's an amazing young man. He just doesn't look young.
Another one of our team members that I saw some social media posts. You remember, Adi? He was at
Yeah,
the Berkshire Hathaway event recently, and I saw some stuff on Facebook and on our community, the clubhouse, about him listening to Warren Buffett and Charlie Munger. Looked like he had a great time. Adi, I'm going to give you a big shout out there. I think that's a very cool thing. Matt, you ever want to go to the annual event for Berkshire Hathaway? Is that something you'd like to attend?
I have no desire to go to any public company and their shareholder meetings. I have zero desire.
It's a zoo, it looks like. I know that, like, I think they shut the whole town down. And just for people watching, it's kind of like, to me, I agree with you in terms of public, shareholder meetings and whatnot. Um, But even like hockey, I'm not a hockey fan, but if I go live, I enjoy it. I'm sure if I was there with 15,000 investors and watching the, festivities, it would probably be fun. I can imagine it would be a good time.
I'm not saying it may or may not. I just don't have any desire to go listen to people talk about their stock. I've listened to a few conference calls on earnings more than I care to admit. But they're not exactly entertaining. Yeah, you get to hang out with Charlie and Buffett, who are 88 and 92 respectively, going on 48 and 52. You gotta listen to them. By the way, Buffett is uh, I think he's able to take a pension plan now off Berkshire at 90 years old. In 2 years, Buffett can take a pension. That's quite astonishing. But they go there, they announce earnings, they you know announce what their company's doing. That would be okay. I could definitely see Audie doing it though.
Oh yeah. I mean, he's seen them all. I know Audio well enough. I mentored him, and he travels quite a bit to a lot of these different conferences. He was down at a symposium for legacy education recently, and he met Anthony Humpage, who's the CEO there at Legacy, and he was all excited about that and talked to him for a bit. And he goes to, all kinds of different things, but he's a great team member. I mean, that's all I'm saying
Awesome.
as well. Just the concept of having these team members in these communities. And if you're over there on the clubhouse, I mean, if you're ever out doing something fun or you put a trade up there, definitely communicate and let's build this thing fun together. Matt, I do want to go through the market skyline. I want to get your take on a couple of things. Number one, big headlines for me. Apple Computer is hitting record highs. $700 billion company. We talked about that on the pod before. Could it get to a trillion? I was in my class recently, just talking about just how much Apple has grown even just a few years. OPEC cut production, and Macron won the French election. Now, those are the three top headlines that I found as I was going through my morning routine here to start the week. What stands out to you out of all that stuff?
Well, number one, Apple stands out. I mean, we were talking about this a couple weeks ago. Regarding if Apple being the first $1 trillion company, we're talking, well, Apple would have to go to X price, right? It'd have to go up about another 30% after it's already up year to date, 30%. So, you asked me the question, well, what's more likely, Apple going to here or Apple going to there? And I said, well, Apple going to 100, right? Because I thought we might hit a recession before then. But damn, it's up like 7% since I said that. So I think
Yeah.
it's trying to prove me wrong. Apple just on fire, just gangbusters. Up 3% just today alone, up at an all-time high at $153.70. Just doesn't want to slow down. But the market, on the other hand, kind of does want to slow down. The market's sitting, hit its head above at resistance today. Briefly went above an all-time high in the market at 23.76 and 25 cents. But then it started coming back down, and that's a little weird. With Macron winning the French election yesterday, you'd think the market would respond a little more bullish, but it's not. It's kind of selling off a little bit, but it's only down 3 points. I mean, nothing too big. Just really kind of struggling at that resistance zone. I expect the market to remain neutral. Is what I expect the market to do. Apple, it's just gangbusters.
And
Absolutely
you
gangbusters.
and here's the thing about that. It's interesting. We talk about relative strength, and that's a concept in trading when a company like Apple, who's the biggest company in the world and the biggest by market cap in the entire S&P 500, is up huge and the market is not following through. That does tell you some relative weakness in stock prices in general, but relative strength in the individual company. I thought the market, instantly responded to the French election news with some strength, and I'm sure that they do like the fact that you've got an EU supporter, moderate, for just basic reasons. When you're dealing with economics, people who believe in free trade and open borders and all that kind of stuff, it's better for companies. We'll talk more about that, I'm sure, over time, because I don't think that whole debate between nationalism and progressive type thinking is going to go away. That's a consistent thing we're going to see around this world. But really, I mean, it's kind of feeling like the market's stalling a little bit. S&P pressing resistance at 2400, like you mentioned, potentially a breakout zone here, Matt. You tip your head above the ceiling there, but then you close back down. It'll be really fascinating to watch that go through the week. But I think even maybe more interesting is crude light. We have talked about oil so many times, and I saw a news headline with OPEC coming out. They're going to cut production, and supply demand metrics. You cut production, they're trying to make prices, go back up, obviously, but price has not really done that. In fact, we're breaking down here and we're rallying back into an old support zone. Matt, how do you see oil here shaping up?
I talked to Bobby in the interview that we're going to play later about this, what's going on with crude. And crude, obviously, in a short-term bearish downtrend, showing tremendous weakness over the course of the last 2 to 3 weeks. It's went from 53 all the way down to 46, which is, you're talking, $6. You're talking 12% price movement to the downside in the last 2 to 3 weeks. But it is really overextended to the downside. I expect crude to have a positive.
Yeah, yeah, and volatility always in the crude market. It's kind of one of those that's just built so much into news stories and headlines, and every Wednesday they have an inventories meeting. It just always drives volatility. It's one reason why I've liked energy companies and oil trading in general since the beginning of my trading. Let's see here. Now, also, I'm looking at gold. Gold is in a nice bullish retracement. Matt, there's a concept that you teach in your classes, and you taught me a long time ago called pay. And it looks like gold is in a pay range down here, similar pullback that we saw in March. In March, if you look at that, we pulled back from 1260 to 1200, about a 60-point pullback. And then here recently, we've gone from 1290, 1295 down to 1227. So is it lining up for the potential for a move back up? How do you see gold?
Well, gold gold's interesting right now because it's kind of following what we had expected. We said it was going to break out at 1260. 1260. It did. Our target was 1300. It hit that target. Now it's retracing back down. Obviously, this is a standard bullish retracement. It's slowing its momentum to the downside. Any upward movement in price above the previous day's high is a wonderful, wonderful technical buying signal, which means you're talking somewhere around your intraday highs of 1231. So anything above 1231 is a buying opportunity for me.
Yeah, and so much of gold and the dollar and everything's going to be tied to interest rate policy in the Fed, and they've got another meeting here coming up soon. I'm sure we'll be talking interest rates for the rest of our lives because it is the way that the banking sector and obviously the central bankers try to affect the economic situation. Interest going back up, who knows what's going to happen with the dollar? You would expect the dollar to strengthen, but Matt, that dollar chart is ugly. I know we're range down. I know it's not support, but I just have no confidence in the U.S. dollar right now. Descending triangle really on that daily chart, and it's going to
Yeah.
be interesting to see if it can have any kind of stability or hold. Probably the most likely scenario would be a neutral range through the summer while interest rates churn and whatnot, but who knows? I don't have confidence in that currency. I don't know about you.
I have no confidence in it. Range down. It's underneath $100. I expect it to be a little range bound this week, but long term I'm bearish. Short term I'm bearish on the dollar. There's no doubt about that. There's not when you're looking at the dollar right now, there's not a lot of reason to be that hopeful. The only thing I'm looking at is maybe 99 being an old resistance zone could prove to be support as it's proven to be right now. But outside of that, I think anybody on the buy side of the dollar is more hope than anything. Even Goldman Sachs is now calling off their bullish bet
Yeah.
on the dollar.
Yeah, and that's pretty much what we do every day, Matt. Our market Skyline, if you're out there listening in podcast land and you're thinking, okay, this is how Matt and Tim do it, well, that's kind of our daily routine. And I get emails from students all the time, especially new students, like what should I work on? What should I work on? And developing process is an important thing. After you go through crude, gold, the dollar, volatility, and that's the last one I want to talk about here, Matt, you then can develop a market opinion, and we call that a market posture. I'll get your take on that in a minute, but I do want to ask you what you think it means to see the volatility index at the lowest point it's been in a decade. I mean, it's literally we're 9.77 here on the VIX, and option premium is just nowhere. What's your take on that?
The VIX is an absolute joke. It's an absolute joke. The market's down today, and the VIX is down 7.5%.
Yeah.
I I I don't know how to read that. It's not it. It used to be the fear gauge. I don't see it's losing credibility. It's losing any reason why you would even want to look at the VIX. And I'm still seeing option prices that are fairly high in a lot of capacities. I'm still saying I'm still at the money call options on. I'll just give you a couple examples here. So let's take Tesla for example. Now obviously it's not going to be the one-to-one versus what the market's doing, but Tesla, 70-day contracts at the money call option is currently 7%. At the money put option is right around 7%, which means you're still paying 7%. Typically, that's right in the mid range. On Apple, at the money call option, 70 days out is still you're paying about 5% on both sides of the equation. On the S&P 500 itself, 70-day contracts at the money call options, you're paying right around 3% in that range, right around 3%. So, the VIX itself, it's just, and I'm serious, I'm having a hard time reading the VIX these days because it's not a direct representation of fear any longer. Like I said, I mean, just look at today. The S&P 500 is down down right around 3 points, so nothing much. But the
Hmm.
VIX is literally down, 7.5% today,
What's
and
interesting about what
it's not normal.
Well, and what you're talking about is really interesting. When we came into this whole thing, Matt, every mentor we had said you got to look at volatility. You got to look at volatility. And I'm still a big believer in volatility trading and understanding Vega is a critical component for any type of option trader after you get past the basics, right? You probably don't need an advanced understanding of it to do some
Yep.
naked puts, cover calls, that kind of thing. But if you do this for long term, you're going to run into volatility. And as the VIX changes, Matt, it makes me really scratch my head. And, maybe we're going to have to do some digging into this. How is it really being measured and impacted and what is really happening there? Because there are companies in the market that have high volatility. The option pricing, who knows? Maybe the market makers are just getting more efficient. Maybe they're just not pricing risk correctly. I'm going to have to wrap my head around this one because volatility is not something you can ignore. And there
It
will
doesn't
be,
make sense to me.
yeah,
No, heavens no.
and there will be a moment where the VIX goes from like
Heavens
10 to 30 in like 2 weeks, you know, and we know it's coming. And,
no. Yeah.
and, and that's where traders have
Well, there might be
caution.
a singular day. There might be one day where the VIX goes from, 10 to 30. It's not, and I don't, like I said, we probably have to dig into this a little bit more in depth, but it doesn't, it isn't correlating to what the market is doing.
Mhm.
Yeah, it goes up and down based on the market too. It's inverted, but today market's down, VIX is down. So if the VIX was down a 0.5%, yeah, fine. Don't care about that. But Tim, we're talking the VIX broke support today at $10. We're talking it being at the lowest level that it's been in over a decade. And we're talking about the market being down today as well. That's what doesn't make sense. If the
Well,
market was up a percent and the VIX is down 7%, yeah, I get that. I don't get the market being down and the market being down and the VIX being down.
potentially it could be the thing with the French election. They just don't see the same risk now that the French election is passed, and so they reprice put options. Who knows?
Yeah.
One great thing about the VIX is it is a numerical representation of option pricing. And if you're out there thinking, well, I don't even know what the VIX is, Tim, or volatility, go to Tackle Trading's YouTube channel and just look up VOL build and vol crush. We have about an hour long video on there that from a couple years ago that I think really would give you some basic understanding of how volatility works. But Matt, I think we can probably do a whole podcast around the VIX, and just kind of talk about the components and really
Yeah.
walk through it. Overall market opinion, Matt. We're heading in the summer. We've been talking about this for a long time. Sell in May, go away. Is it going to be a real thing? I'm personally right now very neutral. I don't expect a breakout when you're not in earnings season. I know we've got seasonality expectations for it to kind of have some risk here, but it's hard to ignore the fact that the market is still at a high, and it's really hard to ignore what Apple's doing. But what's your take? Neutral, bullish, bearish?
Uh, neutral, neutral. I think the market's at resistance. I think it could sell off just a tiny bit. I'm not too concerned about it, the market by no means. Apple obviously bullish, tech bullish, market because it's at resistance. I'm going to give it a neutral rating this week. If it was, looking down 2, 3, 4, 5 months from now, I'm still neutral to slightly bullish.
And a reminder out there that if and when you are neutral, good strategies would include cash flow strategies, things like the personal gold standard, where you sell naked puts against commodities and collect cash flow, or cash flow condors, which is something mentors use, or whatever it may be that can produce some positive theta.
That was your Market Skyline, brought to you by Tackle Trading. Want to try a pro membership? Get to tradingjustice.com, click the banner, and get your free 15-day membership on us. Now, time for our featured presentation, an interview with Rod Shannon.
And Bob, how you doing today, brother?
Doing absolutely fantastic, my friend. How about yourself?
I just got home last night from, well, where was I? I was in Oklahoma City, Bob. But Oklahoma City is not nearly as fascinating as what you've been doing the last couple weeks. Where are you coming from?
Well, I've been rocking around the Spanish Virgin Islands for the last month or so.
Spanish
Mostly
Virgin
in
Islands.
that.
That is amazing.
Well, that's the proper term. We would know it as Puerto Rico and beyond. There's a lot of
Yes.
islands surrounding the
Well,
main
and
islands.
there's some people there, Bob, that they've had the opportunity to kind of follow what you've been doing. They've been watching some of your videos. I've been posting a few of them to YouTube. The first video, you're sitting there on a rooftop. Then I believe you sent me a few more where you're sitting at the beach, with Marquise, and then one I believe you're sitting there with some random stranger. Just it seems like you're having a hell of a time.
Oh yeah, absolutely. Just on that proverbial borrowed time and making the best use of it possible.
Awesome, awesome. Well, Bob, let's talk to the listeners out there about what you're doing out there and what kind of goal we have here. Bob is out there doing what was called environmental hedging. Bob, it's certainly a trading system we're developing, but it's also a philosophy, right? It's a mindset where instead of exchanging our time for somebody else's money, we get trading, and we use the proceeds of trading to pay for, life or travel or whatever we want. Correct? Talk to the students about what is environmental hedging.
Well, the mindset side is it's actually pretty old idea. It's called the peripatetic university. Back in the day, if you went to Cambridge or Oxford or something like that, late 18th century, turn of the 19th century, what you did is what they called the peripatetic drift, where essentially you went out into the world and you traveled the world for a whole year, and that was the best way to complement and complete a gentleman's education. Um, you know, Books and traditional education, so on and so forth, can only provide so much. What they cannot provide is a certain amount of perspective.
Hmm.
And that's the core idea behind environmental hedging is gaining that perspective. The best way to learn about the world is to go see it. Sit down with a local, have him tell you about his town. Adventure, take risks, do things that you typically would not do at home, and has a very, very good grooming and growing experience on any type of a person. So, at its core level, that's environmental hedging. But what we do with the trading system is we really confront and attack a very, very important issue, and that's the environment. So basically, what I do is I short sell companies which I see having a net negative on the planet, whether that be environmentally or culturally, what have you. Then I take the proceeds from those short sales and I roll them into covered calls on stocks, ETFs, things that are environmentally oriented, or I would say a net positive on the planet. Then I basically cash flow off of it.
Yeah.
Use the proceeds to fund a good perspective trip, this peripatetic drift, if you will, and then at any opportunity that I can, I try to give to charity. So in Vieques, I was given to the Reef Foundation, protecting some of the reefs there. Here where I'm at in Ponce, basically just buying homeless people food, hanging out with them. This
Yeah.
kind of sounds a little bit weird, but That's
Well,
basically the idea
it's
behind it.
only weird in the sense that, most people don't think about it like that, right? Most people don't think about, okay, let me go travel the world for a year to, basically on a journey of enlightenment, right? I mean, that's what kind of what you're talking about. Most people think that would be, oh man, a year to think of what I could go work for a year. I could go think about the money I could make in a year, and yet there's Bob Shannon traveling the world, basically on trading, basically paying for the cost of living through his trading. You're taking money away from companies that you disagree with. You're investing in companies that you certainly believe in, like the Whole Foods and the Teslas of the world. And whatever's left over, you're giving to charity, and I think that's an absolutely amazing thing, and I think more people should definitely do it. And Bob, I also believe that this journey could also enlighten other people to do something similar, to take control of their life as well. Bob, what really kind of gave you the inspiration to start this?
Well, I earlier in my life, in my early 20s, I spent the better part of about 3 years traveling, just backpacking in Central America, a variety of other places there. So I've always naturally kind of had that bug, and most certainly saw the categories of travel for what they were, and I felt, especially in the United States, people would be greatly benefited by being able to see those things. But the thing about the United States is it's such a big country. It's very rare that people will conjure up the notion of going to an underdeveloped country and getting out of their comfort zone and leaving behind the creature comforts of the United States.
Hmm.
As a young man, I wasn't really too worried about that. If you give me a hammock and a bed and maybe one square meal a day, I was very, very happy. But this go around, now that I'm properly funded, it's kind of interesting. I'm probably making more money and saving more money than I would if I was living in the United States doing the same exact thing, because cost of living here is drastically cheaper. So I'm actually starting to pile up a good amount of money, and which just leads to better experiences. I could afford to go on adventure tours and things like that, where I usually wouldn't be able to do that when I was younger.
Hmm.
So I think I'm on to something here, and kind of like what you and I were talking about the other day, we're going to be parlaying this into trade camp. That
Yeah.
way, other people can have this type of experience.
Speaking of trade camp, you had one of our listeners, fellow team members down in Puerto Rico with you this past week. Talk to us about how your first edition of trade camp went.
Oh, went flawlessly. We had probably had too much fun. It was absolutely fantastic. Uh, you know, Marquise will never admit it, but the day that I sent him back to the airport, I think he had a tear in his eye.
Oh, he'll admit it. I'm going to see him next week when I'm in DC, and he definitely will admit it. Now, what is trade camp? Just to kind of make sure everybody kind of understands what you're doing down there with not only environmental hedging but trade camp as well. What specifically is trade camp?
Well, basically, I just teach the environmental hedging system, but in the actual environment where you know, you want to implement it. So,
Yeah.
Marquise, he flew down to Puerto Rico, picked him up. We went down to this island called Vieques Island, and essentially we just enjoyed the beach life, met a lot of people, taught a lot of people actually, two girls from France and a boy from Tulsa, Oklahoma, how to trade. I believe they're members now. But yeah, it's just gaining that perspective. Marquise, he'd never been outside of Virginia or Georgia ever in his life, so
I
the things
didn't
that
know
he
that.
saw were, yeah, yeah, he hadn't been out too much, but in terms of
Wait a
travel,
second.
but
So let me get this straight. So Marquis never been really outside of Georgia or Virginia, there in the D.C. area, and you felt it was a great idea for his first experience getting out there to go down to trade camp with you in Puerto Rico. I love that.
oh yeah.
I absolutely love that. In terms of trade camp, Bob, you go down there. You're in a location where you're applying the environmental hedging trading system, where basically it's not just a cash flow system like personal gold or the Tackle 25. it's also it's a directional system, right? You basically short stocks. Take for example, you know, a Goldman Sachs, for example. We're not exactly big believers in what Goldman Sachs provides good to the world. So you short a stock like Goldman Sachs, and you buy a stock like you know, Tesla, and you basically cash flow on Tesla. You take the proceeds to, you know, pay for the cost of living, pay for, you know, food, shelter, entertainment, whatever else you're doing out there. And you know, Marquise goes down with you to Puerto Rico, and you know, you basically travel and you're hanging out and you're meeting new people and you're say, you know, you're hanging out on the beach and you're doing it all with proceeds from your trading. And I think that is just honestly one of the coolest things I've ever heard. You know, I still remember you and I sitting at night in, you know, some random hotel room, you know, talking about this. And, you know, Bob, I remember the first time we talked about Trade Camp, if you remember, it was we were going to build some buildings up there, you know, south of Park City.
Yeah, Lake the Jordanelle Lake,
It was the
little
Jordan
stabbing
Lake.
cabins
That's
or
right.
something.
That's right. We were just sitting there. We were going to build some buildings. We were going to have trade camp, and you know, and basically we were going to bring people out, and we were going to, you know, basically, you know, go fishing and hiking, and you know, we were going to just have 3, 4, 5 days of just trading during the day and having fun with all the amazing students at night. And now you're doing it, Bob. You're out there, you know, down in Puerto Rico right now, and you're doing it, and that is so awesome. Tell me a couple stories from this past week.
Well, one story that stands out, me and Marquise and Lucas and Sabrina and Tara, we were out on the beach. This place called Black Beach has this black sand, and you rub it on your body. It has, you know, it's packed full of minerals, so it feels pretty good on your skin, especially when you're frying from a sunburn.
Yeah.
But yeah, we were swimming around in the water, and you know, I saw what looked like a giant crab ended up being a drone, and then there was all these bones around it, and we couldn't really tell if there's a lot of wild horses on the island. We couldn't tell if it was a horse that died, and you know what have you, or if it was a person. It was it was very unusual in that capacity. Another story that stands out: we just the other day I was driving through the mountains, which by the way here in Puerto Rico the mountains are just absolutely fantastic, incredibly beautiful. And I see this big grouping of cars, well, maybe like 5 or 6 cars on the side of the road. And
Hmm.
typically, if there's nothing obvious around it, that means there's something cool hidden. So, hopped out of the car, took the trail down, found the most amazing waterfall I've ever seen in my entire life. About 5, 6, 7 people or so are hanging around there, all jumping off the top, 40, 50 feet down. About the scariest thing I've ever done. It's something I typically would never do, but given the situation where I was at, it's always about you know, taking that extra step, going out into the unfamiliar, doing things you typically would not do, testing your boundaries,
Yeah.
seeing what you're capable of, and seeing where your limits are.
That's awesome, Bob. That's absolutely awesome. Let's bring it back into your next destination after Puerto Rico. Where are you heading next?
Going to Dominica,
Going to the
Dominica
DR.
Republic.
I like it. I
Yeah,
like
yeah.
it.
I was going to be going Cuba way, but unfortunately, it is a it's rather messy to get in there. A lot of visas you have to do. Internet spotty, if not non-existent for the most part. So Dominica is going to be a good little second jump, and then um, you know, Dominica and Haiti are right next to South America, so be popping over there to South America for a minute. Then I got to come back to the States to renew my passport. But yeah, I'm just going to keep trying to head further, further, further south.
So we're gonna start. We're starting into Puerto Rico, going down into Dominican Republic. You're gonna head into Central and South America. Just gonna go where the journey takes you, huh?
Yep,
I
that's right.
like it. I like it. And I'm sure you have some more students that you're gonna have join you along the way to kind of enjoy this trade camp. And obviously, we will be documenting it over there at Tackle Trading, as well as Tackle Trading, the YouTube channel at Tackle Trading as well. And if you want to check out Bob's doing, just get over there to tackletrading.com, sign up for a pro membership, and use the coupon code Justice15. You can also go to our new website, tradingjustice.com, and you can check us out, everything we're doing over there at the website as well. We'll be right back with more from Mr. Bobby Shannon.
This is Trading Justice. Check out our sponsors, tackletrading.com, where you'll find comprehensive trade information, including the current state of stocks, commodities, forex, and economic reports, and much, much more. While you're there, you can download the 7 Steps to Trading Guide, Tackle Trading's proprietary and exclusive PDF guide on trading the markets, and start maximizing your trades.
Welcome back to the Trading Justice podcast presented by Tackle Trading. Get in the game with tackletrading.com. I like to say, Bob, it's changing lives one trade at a time with those amazing scouting reports. But we're back with Bob Shannon, who is on a journey of enlightenment as he travels the world, trading the markets using our systems, specifically the philosophy of environmental hedging and personal gold. And we'll get into personal gold here in 1 second, Bob. But I want to talk about the market itself, Bob. You know, you've been trading the markets for years now, Bob. You're a student of history. You understand the market cycles. The market is currently at an all-time high, Bob. What's your read on the market itself?
Well, you basically nailed it on the head. It's at an all-time high. It has a lot of bubble-like conditions going on, and until there's a reason for that bubble to pop, you'll probably keep going up for a little bit.
Yeah. So I certainly agree with that. I mean, it's at a high for a reason, right? I mean, it's at a high because people are buying in the markets, but it is setting at resistance. It is slowing its momentum a little bit. One of the markets that you love trading, Bob, is the commodity market. What's your read on commodities? Let's look at oil very quickly. Oil, as in crude oil, is currently, let me get you the current price, currently sitting at $46.07 a barrel. It's had a tremendous amount of weakness over the last 2 weeks, Bob, as it's went from $53 down to $46, overextended to the downside. Do you see oil continuing to move down?
Not necessarily. Oil right now is very politicized. I see what it's gonna, what it's gonna do is what it's done over the last year. Hits those important support levels, and then OPEC comes out saying we're gonna reduce the supply, and it shoots right back up. Hits resistance, something goes wrong, maybe Iran backing out on something, what have you, and goes right back down.
Looking at oil right here. Looking at oil, you talk about it being politicized. Get into a little bit of detail, if you don't mind, on why oil is more politicized than say, some of the other markets, like the dollar. The dollar is certainly not as politicized as oil is. The same thing with gold. The same thing with silver. Obviously, we see some of politics in those markets. We see politics in the S&P 500 as well, but not to the extent that oil is. So if you don't mind, what exactly do you mean by saying it's more politicized?
Well, you got to think of it this way. Everything that, plastic, computers, the gas in our cars, even clothes to a certain degree, even the food we eat is used, grown by petrochemicals. It's very, very, very essential for the fabric of our economic systems that oil floats within a certain range. It can't be, the price of crude can't be too low such that oil companies and governments can't make money off of it. But then again, it can't be too high. The day that a gallon of gas is unaffordable to, let's say, a middle class American, you're going to see some big downside turns in the market. And likewise, if the price of oil is too low, has the same effect. So it's in the interest of the top economies in the world to keep oil channeled for the time being. So if you're a master of the covered call, this is oil's great, loving it.
Well, it's let's talk about that because a lot of people when they think about investing, they think about trading, and obviously not all of our listeners out there, but they think you have to trend in a direction to make money. You have to either go up or go down. But a lot of what we do, Bob, we don't care if it goes up or down. We just care that it goes somewhere. And that's kind of the kind of the heart of the personal gold system. Personal gold is a trading system that we've developed over the last couple of years, Bob, with the essence of cash flowing on commodities such as crude oil, silver, gold, cash flowing on U.S. Steel, GDX, which is the gold miners, using that cash flow to pull it out of the market to buy physical metals like silver eagles and gold rounds or whatever the case might be. And so in that system, we don't necessarily care if it goes up or down. We just care that it goes somewhere. What's your read on silver here? Silver's been down quite a bit over the last couple weeks as well. Gold certainly being going down as well. When I'm looking at gold, gold is currently sitting at $1,227 an ounce. Silver, on the other hand, is currently sitting at $16.29 an ounce. Are you a buyer at these levels?
Um, Absolutely. I think you should be stacking metals at any opportune dip in the metals market.
Mm.
Silver is kind of like the little brother of gold. It follows it. It kind of, it basically does what gold does. But every once in a while, silver, as far as the charts will go, will, it might continue upwards where gold might have a little bit of a retracement here and there. And then, likewise, on the opposite hand, sometimes gold is going up, but silver is going down. Overall, silver does trend with gold. The thing about silver as compared to gold, though, is its usage as a basic material.
Yeah.
That's why I like to stack it a lot, is because it's essential in smartphones, computers, all these different things that comprise a large fabric of human existence. Whereas gold, it just has a lot of intrinsic value. It really comes down to proportionality. And silver's at better value in terms of the gold to silver ratio. It's cheaper, it's easier to stack. Um, yeah, that's my basic take on silver right there.
It's silver is such a wonderful hedging tool. It's a wonderful hedge against inflation. It's a wonderful investment opportunity. And I look at silver right now, and I certainly expect silver to come down in price a little bit, given that the trend is currently bearish. Obviously, it is oversold, given the fact that it's been down for the last 3 straight weeks. I expect that to pop up before it goes back down, but I do see it trending down even further from this. And Bob, I don't even care. I don't
Yeah.
even care. If you tell me I can buy silver at $16.30, I'm going to buy silver at $16.30, right? I'm going to own the metal because it's not about the thing that people have to realize is they have to get outside the mindset of, what just right now, right this very instant. They got to think about 5, 10, 15, 20 years from now. And I think it's a wonderful opportunity to buy it at these levels. So in a year from now, for example, Bob, in a year from now, if you knew you could go back the year before to this moment in time, wouldn't you want to buy silver at $16.29?
Oh
Wouldn't
yeah.
you prefer buying gold at $1,230 and wouldn't you prefer buying oil at $46, right? So yes, do they have some downward pressure? Absolutely, they have some downward pressure. But in a year, 2, 3, 4, 5 years from now, if you go back in time and buy them at these levels, I think you would be perfectly fine buying all of those commodities at these levels because commodities are an inflationary product. Commodities are when we print money, when we go into more debt, when the economy gets bad, when things get nasty out there, commodities are a safe haven. So, yeah, like, and the reason I bring it up is because I was asked the other day, I was asked, well, Matt, are you a little concerned about oil going down further? And I'm like, no, I'll buy it at 46, I'll buy it at 40, and I'll buy it at $30. I don't care because eventually, you know what's going to happen? They're going to go back up, Bob, right?
Oh yeah, always. You kidding me? Just take gold for example. If you took specifically GDX, the Vectors miner,
Hmm.
ETF and you superimpose that over the S&P 500 over 30 years, well, gold has outperformed the S&P 500 substantially.
Yeah.
So, you're talking 3 to 5 years. I'd say look at it for 30 years. That's a good, solid passive investment right there, which has, capabilities outside of just, price action, buying at this price and getting a jump on that, like we were talking about. It's a protectionary measure against hyperinflation and all these different things. More often than not, you will experience a point in your life where uh, physical gold and silver is going to be the biggest pile of poker chips you could possibly imagine.
Well, and that's what personal gold is all about. It's all about stockpiling enough physical currency in terms of gold and silver to, ensure that we are protected in case of hyperinflation, or we're protected in the case of dollar devaluation, or whatever the case might be. It's always about protecting for the future. When you talked about you overlaid gold on top of the S&P 500, it reminded me to ask you a question. You're not only yeah, I mean, honestly, Bob, when I look at you compared to what I saw 3 years ago, when you and I first met, in that September at Chambers Bay. I mean, now you're this guy who's traveling the world trading. You're building systems. You've helped me build systems like environmental hedging, personal gold system. It's been quite the journey. It's been amazingly quite the journey. But when I met you 3 years ago, you had two commodities. You had gold, and if I remember the price of gold 3 years ago when we met, Bob, I'm gonna tell you the price of gold 3 years ago. So let me get the latest. 3 years ago when we met, Bob, it was the price of gold was right around. It was very similar to what it is today. It was right around $1,250 an ounce. Now, the price of Bitcoin, on the other hand, Bob, was right around 3 years ago. You're talking after the drop of 2013, where you had the Mt. Gox situation. You're talking right around $300, Bob. Bitcoin. So 3 years ago, Bitcoin's right around $300, and gold's right around $1,250. Bitcoin is now exceeded gold in terms of the price. And you've been on this Bitcoin bandwagon for about 2 years. You and I both have. I think both of us bought Bitcoin right around $200 a couple years back, Bob. What do you see the Bitcoin doing in the future?
Well, for a minute there, I was actually thinking of dumping my Bitcoin position just because the ETF hadn't got approved, and there was some
Yeah,
some interesting things that took place with a lot of the Bitcoin brokers, which kind of spooked me, to be honest. So I took a
it
very
did me too.
fundamental look at it. Yeah, yeah, I took a fundamental look. I was like, okay, well, you have Ethereum, you have Bitcoin, which has actual more functional use if things don't improve or they don't figure out a way to hedge it or protect the actual Bitcoin holdings. Well, in blockchain technology, Ethereum is 100% essential. So, basically, I levered out about 75% of my Bitcoin position into Ethereum, about I think it was $18, $19 per token. Now it's sitting at about 92, 98.
Hmm.
Um, Basically, it was just a stock split within the Bitcoin community, and then also one is a little bit divergent to the other. So a lot of times when Bitcoin explodes in value, Ethereum might go down a little bit or just hover. But if Bitcoin is going down substantially, Ethereum goes up. So
Yeah.
to me, that was kind of it, the community's way of figuring out some sort of method or means of hedging your long position. So right now, enjoying it thoroughly. It's been funding a couple aspects of my trip here and there, but yeah, yeah, love it.
So in terms of ETH, are you telling me that you're more bullish on ETH than you are BTC?
Yeah, yeah, substantially more.
Okay,
I mean,
and tell me exactly why you were more bullish, because I'm bullish on both of them. I'm a little concerned about Bitcoin, especially after the ETF was shut down by the SEC. That certainly did concern me, but Bitcoin is still it's more liquid, it's still more utilized, it's still accepted, it's still accepted more, it's still the common when you talk about the blockchain technology, when you talk about the usage of just the consumer base, Bitcoin is still there. So convince me why I should move to ETH.
Well, think of it this way. So one thing that is being adopted in droves right now by what you would say is accepted financial policy and methods and systems is blockchain technology. A lot of these banks, even things like PayPal, private companies, they're adopting this technology. Well, this technology does not work without ETH. ETH is the token that actually makes the blockchain work.
Yeah.
Bitcoin is created from that process, but ETH is actually used in that process. So, I mean, think of it this way. Imagine if, like lithium, for example, lithium for the longest time was a useless salt. And it wasn't until, lithium batteries, electric cars, all these different things that people realized the salt is actually very, very valuable.
Yeah.
ETH is not much different. For a while there, it was sitting at $3 a ETH, and 13. But once people started picking up on the idea that this is an essential part of the blockchain technology, these big banks are buying it up. Yeah, I mean, it was a no-brainer. Take a
Yeah.
position in ETH. Why not?
So you took what are you about 75% in terms of your cryptocurrency investment? You're about 75% into ETH versus Bitcoin. Is
Yeah,
that about right?
I moved from about 15 Bitcoin into about 150 ETH. So when I made that move, those are the proportions right there. So I got about
Nice.
2 Bitcoin left. The rest is ETH.
In terms of your Bitcoin, then with not just Bitcoin but just your cryptocurrency in general, talk to me about the difference in terms of usage with ETH versus Bitcoin. Bitcoin, you obviously you can use it just by scanning a phone. Is ETH the exact same process?
Yeah, it's a little bit more Star Trekky. It has a whole
Like
nother
Bitcoin
level.
wasn't enough, right?
Yeah, right. To be honest with you, I even have a hard time explaining it. But when you create ETH in the mining process, it's like your own little reserve. So when you are an owner of ETH, you have like your own little pile of lithium, what have you. So
Yeah.
which the blockchain community can take bits and pieces from it, and you essentially get you know increase in value because of the usage of ETH. Whereas Bitcoin is its kind of own sovereign little product that they use. Um, ETH is a little bit more of a community oriented thing. As far as in the most simple terms possible, that's the easiest way I can explain it right there.
Well, a lot of people don't even understand that you can buy ETH in the exact same account that you can
Yeah.
BTC, right? I mean,
Oh,
if you have a Coinbase account, for example, which is like basically it's like a bank account for cryptocurrency is what it is. So instead of having dollars in your checking account at Bank of America, you have dollars allocated in cryptocurrency at Coinbase, and you can buy Bitcoin the same way you can ETH, right? In terms of these cryptocurrencies, and then it's as easy as sending money right back to your checking account in terms of the transfer. So it's really becoming just part of just the consumer-based philosophy out there. I mean, people are now starting to utilize cryptocurrency like they use many other currencies. And I'll tell you right now, Bob, I'm getting excited for it. I'm getting excited for the future of cryptocurrency, the future of our currency systems as a whole. But for the people that were decrying the downfall of Bitcoin and cryptocurrency, man, they have missed out on a ridiculously powerful investment opportunity over the last 3-4 years. I see cryptocurrencies continuing to increase in value. Obviously, they're going to be very, very volatile. They can move up and down extremely fast. So it's not for the faint of heart, but it's something I think everybody should embrace is the cryptocurrency the cryptocurrency investment opportunity. Another opportunity I want to talk to you about, Bob, is marijuana. More and more states are legalizing marijuana. As more and more states legalize marijuana, marijuana could be a investment opportunity out there as well. What's your take on the future of marijuana stocks?
Spark it up, baby. um, yeah, I mean, actually this week I think Canada is implementing full recreational, full legal.
Mhm.
Just like you were saying earlier, every election cycle or even statewide election cycles, state after state after state is dropping and going for recreational use or at least medical use. Um, I mean, frankly, you have what 30% of the population in America who admits they smoke marijuana. I would say there's probably another 20% that never once on any questionnaire ever put that down. Um,
So what are you saying, Bob? Are you saying that the majority of America is high? Is that what you're saying?
I've suspected this for years. um, but I mean, let's think of it this way: the demand's there, and if
The
we,
demand is absolutely there.
oh
No
yeah,
doubt
I
about
mean,
that. No doubt
just
about
just
that.
look at the Mexican cartels, in Central American and South American cartels. Demand in the United States is has made billions and billions and billions of dollars for people that are not necessarily upstanding citizens of the world. I think it's probably a good time now to legalize it, to structure it, to tax it, and allow average people like you and myself get a piece of that pie. It's
I don't think you can stop it. I
no.
don't. I don't think you can stop it. I don't think, and every time somebody like a Roger Goodell comes out and says something about marijuana, like he came out and he runs the NFL obviously, and he was asked it in one of his interviews a week ago. He was asked if they're looking at legalizing marijuana for NFL teams in terms of not punishing it. Goodell went down the addictive path type. Well, it's still an addictive substance. Blah blah blah. But the alcohol's not right. Alcohol's worse than marijuana. But in terms of this, you are going down that road to legalizing it. There is no doubt about that. You are going down to legalize, and there's got to be publicly traded companies that take advantage of that, right? There's got to be those publicly traded companies, and quite frankly, you're talking not just about your micro marijuana companies that you have out there, your medical marijuana companies, your smaller companies. You're talking big pharmaceutical companies. You're talking big tobacco companies. You're talking, the Reynolds American, the Altria groups of the world. They're looking to take advantage of it as well. And I think that's an investment opportunity people certainly can look at.
Yeah, I mean they've actually already have been taking advantage of it. Bristol Myers Squibb, for example, owns a lot of the intellectual property rights to the CBD hash oils, which are used for people with epilepsy and things like that.
Hmm.
They don't get you high, but they have better than any chemical created, man-made creation of prescription for epilepsy. This stuff works better than anything. So they've taken a huge stake in that right now. There's a Canadian hedge fund right now that specifically and exclusively deals in marijuana related things. But yeah, I mean, I don't really see anything other than a straight proverbial line to the heavens when it comes to the investment opportunities that you will see in marijuana products.
Well, I think about it like this, Bob. All we're saying is buy gold, Bitcoin, silver, oil, buy marijuana, and we're not talking the weed, we're talking about the stocks, and get ready for whatever the future holds because it's going to be an amazing future. Would you agree?
Yeah, really the only thing you're missing from that little narrative is a nice little like compound in Alaska, some guns.
Yep, yep. Oh, and get a shovel and bury that gold, right?
Yep, yep.
Yep, yep. That's all we're saying. That's all we're saying, ladies and gentlemen. Get ready for it. Get ready for the future. No doubt about that. Well, Bob Shannon, it's been an absolute pleasure having you on the podcast. Thank you so much. We're looking to get some of your videos up there at Tackle Trading this week. So definitely follow Bob and his journey on at the clubhouse, the Tackle Trading. You can do so by going over there and subscribing to the Tackle Trading and Trading Justice YouTube channel. That's probably where I'll put the blogs there, Bob. The videos is on the Trading Justice podcast channel. So definitely subscribe to both Trading Justice, Tackle Trading, ladies and gentlemen. Also, we will be blogging over there at Tackle Trading, and join Bob on his journey around the world. Applying environmental hedging, personal gold systems. And if you like it, let us know and let us give us a nice little 5-star review there on the iTunes review for Trading Justice. Bob Shannon, thank you so much for coming on the episode of the podcast today, and I look forward to doing more of these in the future.
And thank you, Matt, for everything you've done for me, buddy. Appreciate it.
Awesome. Thanks, brother.
Now that is a bromance that only Tim Duncan and Greg Popovich could understand. Thank you, Rob. Thank you for your environmental hedging and being a good person. I hear it pays dividends. Now time for one of the staples of our show, the Coach's Mailbag. Enjoy.
Okay, welcome back. Trading Justice episode number 216, Environmental Hedging, an interview with Bob Shannon. Now, Matt, quite a deal there. I mean, you guys really obviously have a mentor-mentee relationship, but you guys are good friends and you have a certain perspective on life. What's your take from the interview? What's one big takeaway that you got from it?
It's just Bob's journey. Knowing Bob as I have for the last few years, we obviously share a lot of common values. We have similar interests from an economic perspective. Meeting Bob close to 3 years ago, just really kind of understanding his entire journey from where he came from to what he was doing at the time to the man he is today. It's just an amazing story of a man who, was very, very traditionally educated, but always had that desire as an entrepreneur to see his journey as not only a trader, but the evolution of his life over the last 3 years, being able to take our systems and applying them to his everyday life so that he can live the life he chooses to live instead of the life that, many people are forced to live. Just that more than anything. There was never, one moment in the interview where I was like, wow, this is just right. This stands out. It's because it's so enlightening to see his journey. And I think it can, people can learn from that. People can see a young man taking control of his life, traveling the world as an investor, not working for anybody else, retiring at the age of 30, just enjoying every aspect of life. Last week he had another one of our students, Tim, his name's Marquise, out of Washington D.C. area, and invited him down to Puerto Rico, and they spent a week down in Puerto Rico as Bob, trading, a little mentoring, a little teaching, but just a lot of fun, and he sent me some videos, and I was watching the videos last night, and just awesome, just 2 to 3 minutes on, hey Matt, what's up, and just at the very end of the podcast, he's just like, Matt, just can't say thanks enough because I would not have had this life. And that's why we teach, right? That's why we do what we do is so that when we get those emails or when we get that phone call and it's just, hey Matt, just want to say thanks or whatever the case is, it's just like, man, that just feels good to see this man retire at 30 years old, to see him live that life that he chooses to live, and to know that I played a part in that. That feels good. It feels good, and it's a reminder of why we do this podcast. It's a reminder of why we travel. It's a reminder of why we put in certain sacrifices to see that end result. And he's not an end result yet. He's grown and grown and grown and getting better and better and better. And it was awesome. It was an awesome interview. Just talking to him about trading, environmental hedging, hearing him say, I like to short Goldman Sachs, and it just makes me feel good. And it's like, oh yeah, it does make me feel good to short Goldman Sachs. So I think the one thing I want people to take away from that interview that is coming up right now is it's at some point 2.5 years ago, this young man had never made a trade in his life. At some point 2.5 years ago, this young man was, living on a plot of land in Walla Walla, Washington. He was making wine, drinking more of the wine than he was actually selling. He says that's economical. And he literally was one of the smartest broke people I've ever known in my life. And 2.5 years later, this young man is out of the rat race. This young man is traveling the world. This young man is one of our lead researchers in almost any system we design. This young man is now teaching other people. This young man is living a financial free life. And what I would take away from that is, ladies and gentlemen, if you are new to the market, realize every single one of us were new to the market at some point. But Bobby had his ups and downs, especially in that first 6 months. Bobby had a lot of ups and downs, and every time he had a losing trade, he'd call me up, Matt, what's going on? What's going on? What's going on? And he said, okay, this is what's going on. This is what you need to do. This is the evolution of a trader. And he would come out and he'd be like, man, I'm doing these back ratio spreads and blah 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 blah. And I'd be like, good for you. I don't do them. Good for you, right? Good for you. And why don't you do this? I'm getting an ROI, this, and this. I'm like, I just don't like them. I don't trade that way. Good for you though, right? You'll find out eventually. One day he calls me up, Matt, I just got my ass kicked on this back ratio spread. And I said, good for you. Just grow from it. You're not gonna do them again, are you? No. I said, well, maybe next time you'll listen to me. And that's sometimes as a mentor, sometimes you gotta let your students figure it out, right? You gotta let them kind of go through the process as well. But guys, there is a positive impact at the end of the road, and that's what I want people to understand is that Tim, at some point you were new to trading. At some point I was new to trading. At some point Bobby was new to trading, and we made mistakes and we had fear, and it's you have to overcome that. You can't let it stop you. You can't, I just do not believe that we should work for other people. I think we should work for ourselves. I think our money should work for ourselves, and it takes time to get there. It takes time to learn the skill set. It takes, you're going to have ups and downs, but you're going to get there.
I'm looking at my bookshelf here, Matt, and in my office I like to keep some books that have impacted my life, philosophy, politics, history, and then my trading little club over there from a lot of our podcast Book of the Month clubs. And I'm looking at Trade Your Way to Financial Freedom, or looking at Trading in the Zone, Mark Douglas. And I'm thinking about these great trading books, the New Market Wizards, and they all say the same thing, and that is it starts with mindset, and you have to grow as a trader. You have to develop as a trader. There's not one system that works for everybody in the market. That's why the market's a $200 billion daily market. And what you're talking about here with my journey, your journey, and obviously now you're interviewing Bob, your student, his journey to get to the point where now he is actually doing it, he does have to have some of those ups and downs. And you're absolutely right. If you're out there and you're listening and you're new, just realize that's part of the process, and stay with it, stay focused. In your first year, your number one goal is education, system development, build, some confidence, but don't risk too much as you're learning until you get things down. And you do have to be coachable. But Matt, you and I both know this. Sometimes the best lessons are when people experience them themselves and then come to the same conclusion that you wanted them to get to, right? And you kind of have to let them grow through it. So it sounds like that's how you work with Bob here a little bit.
Bob's, Bob has been a part of everything I've done for the last 2.5 years. And, he grew as I grew, and he kind of did it alongside with me. But I think in that first year, I think you got to focus on, setting good habits, really having good habits. going through your daily routine on a daily basis, putting a weekly schedule in place where you say, okay, I'm going to watch the scouting reports on Saturday. I'm going to prep for the market on Sunday. I'm gonna build my plan. I'm gonna execute my plan. I think setting good habits is so vitally important. And too often people come into the market like, like you say, the market, right? Yeah, the market's there, and it's going to be there tomorrow, and it's going to be there the next day. And you got to take this. You got to take a long view at this, right? You got to take this. You got to take the long view. So I think if people are making money through cash flow systems, in the first 3 months, I think that's a good thing. But I don't think it's the most important thing. I don't think making money in the market is the most important goal people should have. I think it's following systems, learning systems, application of trading rules, setting good habits, doing your daily routine, watching the scouting reports, attending the coaches shows, practicing. I think all of those are much more important than, the market, going out there and making $1,000, $2,000, $3,000. I mean, it might seem weird, Tim, but one of the worst things that might happen to a young trader is they make a lot of money in a very short time frame, because they won't even know if they're making money if they're the right way or the wrong way, or if they're getting lucky, or if it's just the market, or whatever the case is. Good habits, focus on education, focus on practicing, and you'll get there just the same way Bobby did.
Yeah, no question about it. And one of the things out there, if you do have, questions or you want some guidance or whatnot, we do a coach's mailbag every week, Matt, and we're going to transition to that right now. And really, guys, if you have something you want us to answer on the podcast, here's the way you're going to do it. Send us a tweet, a Facebook message, a smoke signal, an email, a carrier pigeon. Doesn't matter how we get it. As long as we get it, we'll consider it. But the most effective way to do it, Matt, is to post a question in the clubhouse at Tackle Trading. And we're going to go through a few of them right now. Matt, I've got a couple. Number one is I'm going to go with Jason's question first. With the VIX being this low, would this be an ideal time to buy protection for the downturn? And this ties into our conversation on the VIX earlier, Matt. What do you think?
Yes. Period.
Yeah, pretty simple. Yeah. In fact, I have a metric I use, Matt, when I go teach somebody through mentorship. If the VIX is below 20, insurance is definitely something you should start to accrue. And if it's below 15, you're getting them cheap, and so that's what trading signals and triggers should develop for an overall portfolio. Yeah, absolutely. The answer is yes, Jason. How much? You're going to need a portfolio plan. You may need to check with a mentor based on your size of account and what you're doing and all that kind of stuff. But the answer is yes. Next one here, Matt. How do I look up what extrinsic value is left on my options in Thinkorswim? Now, I'm going to take this one here. Jing, it's a real simple thing. Inside the chain, when you click on one of the columns, now you're going to need the Thinkorswim software installed on your desktop. And not everybody out there uses Thinkorswim, but let me just tell you, in the trade tab, click one of the columns and go down to option theoreticals and Greeks, and then click on extrinsic. If you need to do some manual calculations, there's ways to do that inside the actual just trade, but yeah, that'd be the simplest way to do it. Matt, you got another? Do you have a question you want to go through? I got another
one more. From Troy. Troy in the clubhouse says, what is the amount of daily theta required to make $100,000 yearly income? I'll take this one, Tim. Troy, great question. Also a great member of the community. Troy, you take 100,000, you divide it by 365. If you take 100,000 and you divide that by 365, theta calculates the amount of money that is decaying out of an option every single day. You would have to need 273 theta. However, Troy, that's if everything goes right? So we all know that things don't always go right. So to account for drawdown, we're going to times that number by 1.4. That number is going to be 383. So if you want to account for drawdown, which is loss, you're going to times that by 1.4, which will be 383. Also, it depends on what type of an account you're doing in, but then you have to plan for taxes as well. So let's plan for taxes. Let's times that by 1.3, and that's going to lead you into a 498 theta. So to account for taxes, to account for drawdown, to account for everything, you need to target right around a 500 theta.
And I do have one last one, which will be easy here. Kind of ties into what you just said about taxes. And this is from Peng Kao Yang. And Peng Kao is a new member. She says, "Hi, everybody. I'm excited to be part of Tackle Team at Clubhouse. Great to have you, Peng Kao. And I'm super new to trading, but excited to learn and progress in this journey. Has anyone set up a business entity for their company?" Matt, this will be a good question for you. And any help you can give me about setting mine up. Any feedback would be appreciated. What would you tell Peng Kao here?
Yes, you definitely want to set up a business entity. It's fairly easy. You can do it through your state, or you can get with Anderson Law. Anderson Law, if you go to our partners page at Tackle Trading, you can get a 30-minute consultation with them and have them do it for you. There are 3 types of entities that you could look at. You've got C Corps, S Corps, and LLCs. They're all good. Obviously, some have different, there's subtle differences between the corporations. What Anderson told me is what I will tell you guys. If you make less than $100,000 in a corporation, any of them are perfectly fine. But if you make over $100,000, an S Corp is typically preferred. S Corps are going to be a little more expensive on an annual basis as well as the set up than LLCs are. So that's kind of where you're looking at. S Corps above 100,000, a little more expensive, better protection. LLCs under 100,000 are just fine.
Well, and I will also give you the obvious, disclaimer here. Matt and I are not going to be the people to give you the expert advice. You do have to get an accountant, a lawyer, build a power team, and all that kind of stuff. And I think the best advice you gave there, Matt, is to network with people who've done this. Guys, if you're out there, don't try to do that kind of stuff on your own. Reach out to people who know how to give you the right direction and all that kind of stuff.
Can I just say something real quick though? Those disclaimers are such bull. I am so sick of disclaimers. Disclaimers against stupidity. Okay, obviously, when it comes to setting up a corporation, when you're talking about business, you should not be cheap. You should get with an expert to have that expert get you. And I'm so sick of having to tell people, here is the disclaimer upon the disclaimer upon the disclaimer. People aren't dumb. Okay, when we talk about, the standard is an LLC versus an S Corp. Okay, we're not tax attorneys, guys. We're not. Get with a tax attorney. So I get, I totally understand why you said, okay, the obvious disclaimers is, but I mean, aren't we sick of disclaimers? We have to disclaim literally everything. Tim, if we record a video, we have 4 effing disclaimers. 4 effing disclaimers. Are you kidding me?
That does remind me of something I always do, whenever I'm doing one of my workshops, Matt, is whenever people bring me one of their statements and I'm going through it, and I'll start counting some of the pages. I'm like, okay, so here's 1 page on what you have, no information. Here's 1 page on the fund's performance, and here's 12 pages of legal disclaimers that their attorneys made you print out. Yeah.
Yeah. I was looking at it yesterday. Some guy brought me in his broker statement. He's like, Matt, what are these? He was just asking, what are these? There's literally 30 mutual funds that the financial advisor put this guy in. He literally, there's it's like 15 pages deep, and he just has 1 page of the account, 1 page of the statement, and the other is legal jargon. Legal jargon. I like literally there's this guy that was wanted to do business with Tackle, and he sent me an updated disclaimer that we should use. And Tim, this was a new disclaimer, and it was 3 pages long. And it's like, do we live in such a litigious society? The answer is yes, that we have to literally disclaim everything. I can't post a video to YouTube just talking about Apple unless we disclaim it, right? We are not financial advisors, right? This is the opinion of Matt Justice, and doesn't represent Tackle or this or that or this or that or this or that. When did we just say that people are stupid? People are smart. People are educated. People know that if I'm analyzing Apple, I'm not saying go buy Apple. Okay, that's their own choice, their own responsibility. I'm just talking about what my opinion.
There's the word right there. There's the word responsibility. There are people in this world that don't want to take personal responsibility. And so that's where the problem comes in. Is that they whenever let's say it didn't work out and they lost on a trade or something, they'd come back and say, well, I got that advice from that newsletter over at blah 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 website or whatever it was, or that's that guy's problem. Or no, it's just people don't want to take accountability for their own life a lot of times, and so people end up in the world that we live in. It's not a fortunate thing. It's not something that you and I prefer, I'm sure, being small town kids. We believe in simple stuff, but it's the world we live in right now, and hopefully we can see some changes with that at some point. But all right, the coach is
I'm
back.
rallying against disclaimers.
I believe me. I believe that you could do 4 hours on
I got more
how much.
content.
I
Listen,
think you could do 4 hours on how much you hate the legal situation right now with disclaimers and lawyers and all that kind of stuff. So,
oh
uh,
yeah, I,
yeah, we'll have to.
I'm anti-lawyer, anti-disclaimer. They make the world a worse place.
Have you started your book yet, Curtis Faye's Way of the Turtle? Have you read that one?
I picked it up. I haven't. I have not started reading it yet. I
You
do
know, I'm
plan on
hitting
reading it this week.
I'm hitting an airplane heading to Hawaii for vacation with my kids, and I'm taking it with me. Try to read it while I'm
Yeah,
on the beach somewhere.
I'm
Enjoy it.
up to DC this week, so I'm gonna read it on the way to DC.
Virginia, D.C. area, if you're out there, if you ever want to see an event, by the way, Matt and I talk about it. Just shoot us an email. And we can give you some information on where we're heading. But D.C. sounds great, Matt. I know
Yeah, I
that
got some
you've got a good. Oh yeah,
awesome team, awesome students out there. DC, one of my favorite towns, DC, beautiful place. So I'm looking forward to
I
getting
do
out there.
have one of
My
my favorite
daughters,
things. Go ahead.
real quick, my daughter said, "Hey, Dad, if you see Donald Trump, why don't you take a picture?" And this is my little baby girl. And I said, "Probably won't see Donald Trump." And my other daughter says, "Yeah, because he doesn't actually live or work there." I thought that was kind of, she's only 13. I thought that was kind of funny. I was like, yeah, most likely he's in Florida, New Jersey, New York, something along those lines, but probably will not see Trump. But if I do, I will take a picture.
Oh, I would be very surprised, obviously, if Donald Trump came out to anywhere where you're going to be working in an event. I think he's got bigger things to do right now with all the craziness that's been going on in politics. But
No
I
doubt.
do have a review on iTunes I want to read,
Awesome.
and if you ever want to like the podcast, go on to iTunes, leave us a review. It helps us. We have 99 5-star reviews, one 4-star review, and Matt, we have that one star review, which we
The
get.
guy,
Oh yeah,
the guy that said we don't know what we're talking about.
oh Dean's
Oh,
review, yeah, they
yeah.
don't
Thanks,
know what they're
Dean.
talking. Yeah, Dean.
Thank you,
All
Dean.
right, so this one's from Karen Clark, and she left us a 5-star review. Very much appreciated, Karen. Karen's been a great member of our community for a while now. Said, I started listening to this podcast off and on over a year ago. What makes this podcast so special it is interactive with a trading community on tackletrading.com. Between the podcast and all the content on that website, it helps you focus on what is important to becoming a professional trader and investor. You do not have to be led astray by the propaganda and misinformation in the news. Thank you for all your hard work in helping others achieve financial freedom. Now, Cam, I want you to try to message Karen directly. Go on to our community and see if you can find her, Karen Clark, and send her a copy of Way of the Turtle. I think that, Karen, I really do appreciate those kind words. Matt, when you read stuff like that, hear stuff like that, it's pretty awesome, right?
Oh, it's yeah, I read that review last week, and thank you, Karen, so much. The best part of Trade and Justice is the listeners, and that's why we bring the fire every single week. We try to do it through truth and honesty, and obviously, it's we have our bias and we have our opinions, but we want people to get the information they need to make decisions over their investments. And Karen, thank you so much for being the best part of tackle trading and Trading Justice.
Yeah, guys, episode number 216 is in the books here. Environmental hedging, an interview with Bob Shannon. Matt and Tim will be back next week. Enjoy, and Matt, go out there in DC and change some lives. Always love those events.